What's up, everyone? This is Jack. This is going to be a quick trade review for my trading session today on Thursday, June 18th. I wanted to talk about my routine, how I'm feeling, the trades I did, how I read the market, all that stuff. First, I want to talk about what I did differently today, and then I'll get into my trades. But what I did differently today was, and I started doing this yesterday as well, I went for a walk outside. Thankfully, we've got nice weather. I'm in Columbus, Ohio, and the weather's been really great. I love being outside, but what I've been doing is going out for a walk for like 15 or 20 minutes. And once I get back into the flow of things, it might be a run in the future, but for now, it's a walk. And I'm stepping into a state of gratitude as I'm walking. I'm thinking about all of the things I'm grateful for, all of the people, all of the systems and aspects of society, nature, all the things. I'm just listing as many possible things I'm grateful for as I can possibly think of. And that's a practice that I do every day, but I've been doing it during my walks and really feeling as much of the feeling of gratitude as I can while I'm walking outside. And that's been really nice. So I'll do that. That's something I've been doing the last couple of days. And I think that's been helpful. And then when I come back in, I've been doing about 20, 25 minutes of yoga. I like to do kind of slow flow, Ashtanga-y vinyasa. That's pretty basic, but I think that has been helpful prior to my meditation, because in the tradition, yoga is kind of the preparation for meditation. And I notice a very big difference in my meditation when I do yoga beforehand, immediately beforehand. And then, so after I do 20, 25 minutes of yoga, then I've been meditating for 45 minutes. And I can meditate for 45 minutes because I've worked my way up to it. I've been a fairly consistent meditator for the past several years. Kind of fallen off here and there. And late last summer or late fall, I came back to daily meditation, and that really saved me in a lot of ways. So I started out small, 10, 20 minutes a day, and worked my way up to half hour, 45 minutes. And 45 minutes is really a sweet spot for me. 30 minutes minimum, but 45 minutes is great. And so that was my routine this morning. That's different than my routine for the past month or two. Usually I would not do the walk or the yoga. I would just do my meditation. And I think adding the walk and yoga in there has been helpful. Something else I want to do as well moving forward is doing some adding in my tea a little bit earlier, like possibly before I do yoga. Maybe I'll have some tea to just really make sure all the juices are flowing as good as they can be. All right, so with that in mind, I felt, very calm, pretty focused. And after my meditation, I always go get some tea, and then I get to my desk and I start looking at the market. Typically, I'll drink like an Earl Grey tea or a green tea. So I've been doing green tea recently. And I'll wait until about bar 6 or 7 to start trading, unless something looks pretty good. And then I might take a trade a little bit before, but typically that's not good. And I typically wait for bar 7. So anyway, now let's talk about how I read the market. And something else I do before all my trading sessions is I just make a small journal entry. I just kind of, whatever's on my mind, however I feel for today, whatever happened yesterday or recently, I just write a couple of sentences about how I feel, what I'm thinking, what I want to do to kind of check myself and make sure that all systems are go. And if I'm stressed or not feeling good, then that's one of the checkpoints for me to be like, you know what, today isn't a very good day for me. I shouldn't trade. So anyway, today was cool. Good routine overall. This is what I wrote in my entry. Mild emotions this morning, which means I had this mild sense of like frustration for some reason. and I think I understand it. It's something that I think it's honestly just something recently that's been put in, but I think it's on its way out. I'm pretty familiar with what it is, and so I wrote that mild emotions this morning that increases the odds of mistakes and emotional trading. And then I wrote, it's a good time to practice awareness, discipline, and focus, and patience. So what I'm doing is I'm recognizing that I'm feeling some sort of conflicting emotional state, but I'm going to proceed with my trading session anyways, because with my routine that I've been doing, I feel very calm and pretty balanced. And I want to do my best to practice awareness of what is going on, not only on the chart, but in my mind, in my body, and practice the discipline and focus that is required to trade well. So I proceeded with my trading. I get to the desk right around bar 4. Let's zoom in a little bit. And so when I see this big sell-off, the first thing I'm thinking about is the gap. We have a big gap up. And from my studies, I know that whenever we have a big gap up, it increases the odds that we have trending trading range behavior. And it could lead to a reversal day if we have a consistent trend up. It could lead to a bear reversal around the middle of the day or so. And if that doesn't happen and we have a consistent trend down, then we could be in for a trending trading range bear trend. And that would make sense with the daily chart. On the daily chart, we had FOMC yesterday. We had a big bear trend bar that was surprisingly big, that broke below the moving average, but now we have this big gap up. So that was actually a buy. Everybody bought the close of that bar. So it increases the odds of trading range price action for that reason. And you can see on the 5-minute chart, we're up near the high of the trading range from the FOMC. So because we have a big gap up, and because we're getting a pretty good looking bull reversal on bar 4, and we're far above the moving average, I imagine that we're going to continue trending trading range behavior. So I don't think we'll have a small trading range day. I think it's more likely that we'll have, at a minimum, a trending trading range day with swings up and down. So I'm prepared to buy, I'm prepared to sell, and it's better to wait right now. We have a trend from the open bear trend. Big consecutive bars increases the odds that we go sideways to up and pull back before we find more sellers and test back down. We may find sellers at and above 4. It is not a high probability short, and it is not a high probability long, but we may find buyers below 4 if we get there. So probably better to wait, and that's what I did. Bar 5 got some follow through and then reversed down, and we formed a strong bear reversal bar. And this was the first reasonable setup of the day, in my opinion. I think that there are likely sellers at and below 5 for a test down into the range of 4, and then there are very likely buyers not far below 4. Possibly they don't come in until the moving average, but I think that this was a reasonable short. So at the close of bar 5, I got short. And when I got short, I waited for a small pullback and then got short because I like a better entry price if I can get it, if it makes sense. And odds were that we would pull back at least a little bit. So I got in right here, and then we moved lower, and right around the low close, we started to hesitate. We went a little bit lower, popped back up, and I decided this probably wasn't that great of a trade. If we were going to accelerate down, we probably would have done it. And because we didn't, I went ahead and got out there for a scalp profit. And I thought that that was reasonable. Not terribly ideal. I'm entering into the market a little bit earlier than I typically do, but I think that the signal bar in context was strong enough for the scalp, so I'm okay with that. Then we have a pretty weak buy signal bar, but it's a possible double bottom. So it's likely that we'll test up, but it's also likely that the bears will look for a second leg down and be looking to sell at and above 6. So I get short, I sell, basically try to sell the close of bar 6, and I'm looking for a test below 6, a second leg down, a test below 4, a new low of the day, and we don't get that. Instead, we pull back, And I expected that because we have a possible double bottom here, but I don't think the buy signal is very strong. So I'm going to look to sell above 5 if we pull back. So I'm still holding short, and it's not ideal. Now we have consecutive bull bars at the close of this bar. So I'm thinking, okay, we are probably going to go higher. The bulls will get a second leg up from 4, but there will almost certainly be sellers above 5. And whenever I tell myself that something is almost certain, I'm always aware that I could be dead wrong. Nothing is almost certain. So, as soon as I said, almost certainly there are sellers above 5, I immediately picture a big acceleration bar that goes far above 5. And I thought, okay, I could sell above 5, I could sell above 2. I'm allowing myself to scale in. That was part of the plan with this entry. I'm aware that this could be a double bottom. I'm taking an early entry, anticipating a quick move down. If we don't get a quick move down, very likely sellers somewhere above 5. So I'm willing to scale in. So that's the premise here. So I hold short, and I'm looking to sell somewhere above 5. Depending on how strong the momentum is, I may not sell right at the 5 high. I may sell above 2 or possibly the 1 close, something like that. So we start to move up steadily. We're kind of hesitating around this area. We break above it, pull back, and then we kind of get back above to the high. And I decide that this is enough hesitation and enough acceleration up that it increases the odds we pull back on the following bar. And this is still a reasonable place to sell. And we did not get to the 2 high, which was the primary place I was looking to sell, because when we started to move up, I imagined that we would go far enough above 5 that it would make more sense to sell a distance above the 5 high rather than sell right at the 5 high. But once we broke above it, pulled back a good bit, we came back up and I got short, scaled in right there at the 5 high. But now at the close of 8, we have a pretty good looking bull bar. We have 3 consecutive bars up. This is a second leg up from the rally on 4. And we're on a double bottom. We're possibly always in long, and I'm short. So that is not good. I am not short looking for a swing down. I am short looking for a scalp. So at this point, we're in a trading range. We're possibly high in a small, tight trading range, but it's very likely that we'll find buyers somewhere below 8. They may not come in until the 3 close or the 4 low, but very likely there are buyers below 8 because we have 3 consecutive bars up and we have 2 legs up. It's likely we'll pull back and we'll get some more up. Odds are we could form a bull channel that gets above the high of the day, and later in the middle of the day we could sell off. We do not have to sell off right here, and we are getting evidence. The double bottom, the buying pressure, the good looking reversal bar, and then the big bull bar. We're getting enough evidence that it's very likely we're going to form a trading range or bull channel instead of a bear trend down. The initial premise was selling a pullback in what would be a bear trend or trending trading range down to the moving average or something like that. But instead we're reversing up. We have a trading range. So now I'm short. My average entry is probably right about here. So I'll wait to see what happens on the next bar. I have a wide stop. I'm not willing to scale in more, and I'm looking to get out on the next bar. So once we turn down on the next bar, it starts to move down pretty steadily, and I can tell that there's a pretty decent amount of momentum. It's very likely that we will go some distance below the low of 8. So I hold short for the entire bar. I think about getting flat below 8, but we break out below 8 and we have a pretty decent close on bar 9. It's a pretty good sized bar. It's very likely to get some more follow through, but we do not have to go below the low of the day. We do not have to make it to the 6 low or even the low close, because for the bulls, this is a pretty good structure. This may be a pullback. There may be buyers at and below for a retest, and that would form a bull channel. So I'm looking to get out somewhere below 8 if I can. Very likely that we'll get some continuation down. We might make it to the low close. That would be a reasonable place to get out. It looks like we bounced from the stop entry price for the bears that took the short under 5, and so I'm looking to get flat somewhere below 9. And what we do is turn down. We break below 9, we break below 7, and we do not make it to that low close, and we start to hesitate and turn up a little bit. And as this is moving down, I move my protective stop a distance in, and once we go below 9, I think I moved it to that part, to that low, and then moved it a little lower, and eventually I got stopped out for a profit. So I'm cool with that. I think, this probably isn't the best short trade, so it's probably a good idea to get out. We're low in the range. We're possibly in a bull channel. I want to be flat. And then we start racing up. And I think for the bears, they've got 2 legs up. They might get a wedge. They might get a 3rd leg up. But this is a pretty good looking second entry short. A pretty good looking low 1, a pretty decent looking low 2. That really should have led to continuation. Because it didn't, and because we started to pull back and race up towards the high of 8, I decided to get long. Because to me, we're going to make a new high above 8. We're going to make a wedge top, and then we'll probably try to sell off. There's enough buying pressure here. We're on a double bottom. This is a pullback for this 3-bar micro channel. It's turning up aggressively. I go ahead and get long, but shortly after I get long, we hesitate around the high close and the high of 9, and I think, you know what? This actually isn't that great of a trade, and I go ahead and close it out for a small scalp. I'm just like, you know what? This is a little impulsive. The context isn't very good to be buying right here. I should wait. This isn't very good. This could pull back all the way to the open of the bar, and I'd be pretty disappointed. We might be testing the high close and pulling back. I'll just go ahead and close it out. So I get flat right there. And then some time goes by. We break out above 8. I could have held and took my scalp off like I had planned, but that's okay. And now we have bar 10, a pretty big outside up bar. It is 3 pushes up, but we're still on the double bottom. We've got trapped bears selling below 6, selling below 9. They're probably disappointed. They're probably going to look to sell somewhere up here. It's very likely that we're going to go higher. But bar 10 is a climax, and we have 3 pushes up. For the bears, this is a wedge bear flag. Not very good price action for the bulls here. Bad follow through after a good looking reversal. Bad follow through after a good looking breakout bar. This is a really good looking breakout bar. Odds are it's going to get bad follow through. So I decided to get short after it breaks out and comes back below the high of 8. It looks like it closed right at that price, possibly a little bit higher, but I'm short on 10, just looking for a small scalp and willing to scale in using a wide stop, well aware that we are possibly always in long in a bull channel, but expecting a pullback here because we have so much overlap, bad follow through for the bulls. There are likely sellers at and above 10. But as 11 turns down, we break below the high close on 8 and kind of pull back a little bit. And I think, you know what? This also isn't that great of a trade, and we might be always in long. So I think I'm going to close this out. I don't think this is a very good trade. I think the premise was decent, but it's really not that good. We might be in a bull channel, so this might turn up. So I decided to get flat right here. Small scalp profit. Not great trading on the day. I do have one decent winner from this entry up here at the high of 8 down to the low of 10. So that's reasonable. Now we have a 3rd push up, and what I noticed was that we have a bull breakout of a bull channel right here. And because we have a bull breakout of a bull channel, it's very likely it will fail within a few bars. It's not a great example of a bull breakout of a bull channel because I could easily find a much better looking breakout of a bull channel that fails. And this doesn't look great. There's a lot of overlap, bad follow through, tails. There's problems with the rally. But look at this breakout bar. We have bar 11 breaking out, testing the higher moving average. A pretty deep pullback from the sell-off, a wedge bear flag. And we're trying to break out of this bull channel right here. And this to me doesn't look very good. First of all, traders initially sold a close of 10 and we pulled back. And now we're breaking out above 10 and pulling back and closing right at the 10 high. So this to me is not a very good looking bull breakout of a bull channel. So I think I'm thinking about getting short here. So let's see what I do. Okay, so I don't sell the close of 11, and we don't break above it to sell above it. So I don't really have a good sell up here. And instead, I'm looking to sell the breakout, looking for a test down to the moving average or to the 10 low, because we have a wedge, failed bull breakout of the wedge. Now we're turning down. We have a low 3. And it's pretty strong. It's decent. I sell the breakout below 11, which is not a strong sell signal bar, and I'm aware I'll probably need to scale in. So I use a wide stop, and I'm happy with bar 12, but it needs follow through. And we break out far enough below the low close on 9 that I decide, okay, this could fail. We could test the low close here. We could test the stop entry for the bears that got stuck down here. We could test the moving average, and we could bounce. And I'm short from 12. And as we test down, we start to reverse up a few points, and I'm protecting my open profit by moving my protective stop inside of my entry. And eventually I get stopped out right here. I decide that, you know what, I've got, I don't know, 6 or 7 points down here. I think I had around 9 or 10 points of open profit. I'm willing to give back a few points, but I'm not willing to give back 6 or 7 points. So I get stopped out right here. And it turns out that was a good idea because we end up reversing up. It ends up failing. And I kind of got the sense that this could work out for the bulls. You know, if we're in a bull channel, this is what a weak, broad bull channel looks like. If we're in a trading range, we could test back down to here. But to me, we're in a bull channel. You know, we have a higher low on 6, we have a higher low on 10. We're getting some consecutive bull bars here and here. We're not getting any consecutive bear bars since the sell-off on the open. Very likely we got to go higher to find sellers. And you can tell that the market is going higher to find sellers because you could sell the close of every bull bar and make a scalp. You know, even selling the close of bar 7 right here, you can make a couple of points. So if you think about it, you're selling the close of every single bar, making a scalp. It's very likely that the market is only going higher to find a better price to sell off from. So that's the premise for the short there. But then we turn up and we form a very strong bull bar. Now, if you look at this, this is bar 13. This whole rally right here could be one piece, one leg. And this deep pullback could be a spike break for some higher time frame. And it turns out that it was. And now we're reversing up with a strong buy signal bar. The bears that took the short on 12 are super disappointed with 13. 13 could be a pullback, and that's reasonable. You could sell and sell more higher. But more likely, we are going to rally and test up near the high of 11 because this is such a strong reversal up. It's such a disappointing bar for the bears taking the short that we probably have to get at least some follow through before the bears get a second leg down for 12. And this might not even get a second leg down for 12 if the bulls can get an acceleration bar up. So very likely we pull back and go a little bit higher. Very likely that we test near the high close of 11. So I get long right here. You can see my entry right there. I entered just a little early before the close of the bar because we've been moving steadily higher ever since the reversal up on the tail, and the body is pretty good size. To me, this is a good indication that we're in a bull channel, and I'm buying a stop entry from near the channel low. We just tested the low of the channel down here. It's very likely we're going to test up near the top of the channel somewhere up here. So I'm long, stop below 10 or 6, possibly willing to scale in somewhere down here. We pull back on 14. We do not reach the low close on 12, and I should have held longer. But we moved up and hesitated enough around the high close. I think we tested it and popped back down. And I was trailing my stop above my entry price because I wanted to protect the open profit I had. Again, you know, once I have 8 or 9 or 10 points of open profit, I'm only willing to give back so much of that before I decide that it's just not worth giving back much more. So I get stopped out here for a scalp profit. And then 14 is a strong enough close. We'll probably go higher, but very likely that we'll try to double top right here. It's not a good double top, but it's very likely that we'll hesitate right here. We'll probably try to get above 11, and we start pulling back. On 15, we go a little bit higher. 15 kind of hesitates around here. The stop entry price for the bulls buying above 13 is 75, 55, 75. You can see it. Well, you can't see it. You can see it right here. The green number at the top left of the 5-minute chart, 555.75. And the low of this bar is 555.75. So there is a 0 height gap between the stop entry price for the bulls and the low of this bar. And we close somewhere around the middle. Now, this is a reasonable sell signal for a double top, and it's very likely that we will move lower because of that. You know, we have a strong sell-off on the open. We're in a weak bull channel up. We have a double top, 3 pushes up, a wedge, failed break out of the wedge, a move down, failed. We might get a second leg up for the bulls that goes above 11 before we turn down. But this really isn't that great of a trade. I get long around the close of the bar, and I'm like, you know what? This really isn't that great of a trade. We could double top right here. I don't feel very good about it. I don't want to get a move all the way down here and then think about scaling in. You know, I'm looking for a quick move up. So I just don't feel very good about the bar, about the price action. I'm worried that we could sell off, that this is a trap. And I just take a small scalp profit right here because I'm like, you know what? I just didn't think this through very well. Because the entry here, I don't think the probability that we go up here is far greater than the probability of going down here on the next bar. I'm not sure about it. Maybe it was, maybe it wasn't. I'm not sure about it. I'm not confident about it. But, something in me knew that this is probably a pullback we're going to test up here. But anyway, I think that it is almost equally probable that this leads to a test down before we go higher. And if it does, and if it's strong, I don't want to scale in because I don't want to scale in against a double top bear flag. I think that I'm a little bit more bearish on the day than bullish, even though we're channeling higher because we're only going higher to find sellers. So I don't want to be scaling into longs on trend resumption from the sell-off on the open. We still don't have an answer to this. I do not think that this is the answer. So this needs a second piece, and we don't have it yet. So that's the risk for the bulls, and I wasn't that confident, so I got out with a small profit there. But of course, the market does what I thought it might do, and then we race higher. Now we have 16. The problem for the bulls with 16 is it's 2 or 3 pushes up. We've got 1 pullback, 2 pullback, 3. We've already had 3 pushes here, but now we have a bigger 3 push pattern. Very likely there are sellers at and above 16. And yes, we're in a bull channel. Yes, we're probably always in long. Yes, we have not touched the moving average all day. But I'm more bearish on the day than bullish. And I think about selling up here. And let's see what I did. So what I did, I didn't sell the close of 16. I waited till we pulled back. We didn't get any follow-through buying at all for 16. So that tells me this is a possible climax. So I get short. And I think we go a little bit lower. This bar really hesitates for a long time. And I take a small scalp profit right here because I'm not confident that this is going to lead to a move down. This could be a pullback that does something like 15, and then we get another bar up. And I'm willing to scale in higher, but I don't really want to. So I take a small profit there. And then a few minutes later, the bar moves lower. And I'm like, okay, I guess I'll front run the breakout. And I sell down here. And I think, you know what? This bar is big enough and strong enough. The pullback is deep enough into 16 that I'm willing to scale in now. When I'm sold right here, if the market were to then turn up right after that, it would be much more difficult for me to think about scaling in because at that point, there's not enough selling pressure here to tell me that there are more sellers above 16. Likely there are more sellers somewhere up here. And I don't want to be scaling in really that high. But I sold down here anticipating the breakout because now we've had a strong enough move down that I do believe with a better, in all likeliness, there are probably more sellers above 16 and the 16 close because the buy the close bulls got a very deep pullback with zero follow through. So very likely there are more sellers up here. So that's why I got short right here. But despite that, the market pulled back and closed right about here. So now I'm short, and I'm going to try to hold short, looking for a test down into the range of 13. And then we get bar 18. We don't get any follow through selling for the bears, and we rally. We test up near the 16 high. We do not go above it. And we break far enough above the 16 close that it makes me think we'll get above 16. And I had a limit order to sell more, I think at 75. I wanted to sell a small distance above the high of 16 because this is pretty good momentum right here. If we go above 16, likely we'll go a couple points above 16. So I had a limit order to sell more up here. And once the market pulled back and down, I then moved my limit order to sell more above 16 high. But instead, the market just kept pulling back more and more. And you can see I actually scaled into my trade right here. Just before the close of the bar, I sold more and it popped back up around the close of the bar. So that was actually my scaling point because now we have a micro double top and a reasonable sell signal, and we have 3 pushes up since 13. We have 1, pullback 2, pullback 3, double top. Very likely that we will test back down into the lows of the range, probably the moving average at a minimum. So I've scaled in, I'm short, and we get the bear breakout on 19. We pretty much sell off from the close of 18, and I decide to sell a little bit more because I think the probability has increased that we go lower. So I'd like to trade a little bit bigger on this position since the probability is a little bit higher. But then I run into a problem. We start to reverse up from the low of 16. And I think, if we were going to go much lower, we probably shouldn't be reversing up like we are right now. So maybe this isn't as high probability as I think it is. But I think I look at the chart, I'm like, you know what? The context is still very good. We're on a pretty good looking double top. We have a lot of selling pressure all the way up in this channel. And I think it's very likely we'll get to the moving average at some point very soon. So I decide to hold short. And we get an inside bar on 20. And that's a bit of a problem for the bears. Why aren't we going lower? Why are we stalling right here? Is this some sort of 1, pullback 2, pullback 3, where we find buyers below or buyers at the close? We get a 2-legged correction and it's not a double top. But then I'm looking at it from the bull perspective and I'm thinking, this is pretty weak. There's good buying pressure here, but now we're getting more selling pressure. And buying the close of 20 is not a good long. And buying below 19 is not a good long either. I would much rather be buying below something like 14 or the 12 close, or even better, down here in the range of 13. So I hold short because it's not a good long, and we actually break out above 20. And I think, man, I guess this trade could end up failing. I moved my stop down, so I have a tighter stop now because the probability was higher. But then we get 21, it starts to race up, and I'm like, man, all right, well, you know what? I guess I'll just take my loss. It was high probability, and then 19 and 20 kind of reduce the probability, so that makes sense. This could turn into a dud, and I'll just have to accept that. But thankfully, the market gods saved me and reversed the bar 21 down into a strong sell signal bar. Very likely that we're going to go below 19. Very likely that we probably get to the moving average on the subsequent bar. And I run into another problem again. This time, as soon as bar 22 starts forming, my entire screen freezes. And when I say the entire screen freezes, I mean everything. This stops moving around. Oh, I'm sorry, you can't even see it. My price ladder stops moving around. Every single bar that you see stops moving. There's no more ticks. Nothing is happening. And but I can still move my mouse around and I can still click. I still see my orders. And I'm like, fuck, what is going on here? So I'm like, okay, I'm right in the middle of the trade. I'm having a technical issue. What is the smartest thing to do right now? The smartest thing to do right now, actually, I think my price ladder was still working. That's how I knew that NinjaTrader wasn't totally frozen. It was just something wrong with my chart screens. So, because my price ladder was still working, I could see where I was in relation to my entry price. And I was below my entry price. And I said, you know what? I'm having a technical problem. Even though I want to hold short and the premise is still valid, I'm going to go ahead and close this position because my charts are frozen. I can't do anything. I opened up TradingView and TradingView was doing just fine. The bar was behaving as I expected it to behave, but I had to close right here because I couldn't see anything. You know, I didn't have the information that I needed in order to stay short. So technical problem there caused me to get out early, but that's okay, no problem. You know, this was a little stressful anyways because I went in a little bit heavier due to thinking that the probabilities were more in my favor. And because 21 reversed up, it caused me quite a bit of stress because I thought, well, shit, you know, the probabilities were not as good as I thought they were. And this could end up failing. And here I am trading a slightly bigger position than I typically would want to. And had I been flat, I would not have gone in with much of a heavy position at all. So anyways, I'm okay with all of that. You know, I had a technical problem. And I think I overall had good behavior today. I had pretty good chart reading today. I had pretty relatively, you know, grounded, pretty emotionally in control and flat, and pretty decent expectations. You know, but had this not frozen up, what would I have done at the close of 22? Well, it's a good bar, but because of all of this overlap up here, I think it's likely that we pull back. And the problem for me now at the close of 22 is I have a pretty big open profit. So I would have been probably trailing my stop inside of my entry price to prevent myself from giving back much open profit. And honestly, I probably would have just closed the trade at the close of 22 because we're right above the moving average. This bar isn't as big as I want it to be. We're probably not going to get to my target before we pull back. And if the pullback is strong, this all could fail. This could be a wedge bull flag. So, you know, at the end of the day, I'm fine. But I think the market did end up going lower. We did pull back and bounce, but we did go lower. And then on the next bar, I think we would have gotten to my target, which was the 12 close. So I would have been able to get my full profit right there that I was looking for. But anyway, it doesn't matter. And then I didn't do anything else. And I went and took a break, talked to my wife for a little bit, check in on her and see how she's been doing. And here we are right now. So it looks like we did go lower. We tested into the range of 13, but now we have a double bottom 13, micro double bottom 26, 28, good buy signal bar. Had I been trading, that would have been a fantastic long entry for a scalp, at least to the high of 26, 25, probably up to here. Reasonable to buy, but probably need to scale in on a pullback. And then a lot of overlap here. Probably sellers not far above 31, up here above these highs. You know, if you look at the day, what are we doing right now? I think it's very likely that what we're doing right now is going to be continued for the rest of the day. I think odds are big gap up. We have a trending trading range day with swings up and down. If we continue to go higher, I imagine we find sellers above the high of the day and we sell off in the later part of the day. But if we sold off right now, I think it would be pretty good probability that we have a trending trading range bear trend. Because I don't think that the buying pressure is enough to warrant. I mean, it could. There is pretty good buying pressure. If we did sell off and get to a new low of the day, we could reverse up. But I don't know that it would be a big, bold reversal day structure. It would probably be more like a bear trending trading range. So anyway, that's my thoughts overall. What else I want to talk about? Sorry, this video has gone on for a very long time. So how did I feel about everything before, during, and after? Like I said, before the market, I felt fairly balanced. I felt a slight tinge of frustration, but I wanted to practice awareness, and I wanted to, you know, accept that and kind of just practice discipline and focus. So I felt all right overall. During the trading, you know, I felt pretty good overall. I was sweating a little bit up here because I was misreading the probability of what was going on. Overall, I was in the right mindset, but and then afterwards, I felt pretty all right with everything. I actually didn't have any losing trades today, so that's nice. But overall, I just want to moving forward. I just want to keep working on my daily routine. I want to keep being as mindful as I possibly can. I want to keep practicing good execution, and when I'm in balance and I'm present and I'm calm and patient, things go really well. So clearly this is a winning system, a winning process for me that I would like to keep practicing and getting even better at, and keep having more days like today. So anyway, that's it. And thanks for watching. I appreciate it. Please like, subscribe, leave me a comment, and I will see you on the next video. Thank you. Bye.